Jim Romer, Dr. Weather. Watch this long 10-minute or so report about cocoa and coffee. If you were a WeatherWealth subscriber over the last few months, the trade alone selling coffee in the 350 area back in the spring or call options would have paid for this news for probably 5 or 6 years. Why did I call bear market? That there's a lot of volatility right now. Watch this video as well as the fundamental factors that will be affecting cocoa prices here over the next few months. So basically, my spider, which I use for commodities all over the world, farmers and traders use this with moisture indices, the anti-herd mentality, how many people are long or short, the technical analysis. You had all these scores together, has been basically slightly bearish over the last couple months, but things are kind of changing right now. As you see, the global crop score there on the right is a +2, slightly bullish, and we'll talk about that in a minute. The dollar going back and forth, demand questions, all sorts of things affecting the cocoa market right now. So the bullish factors, we had a kind of a poor mid-crop from very wet weather last summer, and then a Harmattan strong dusty wind, even with that an El Nino that hurt the mid-crop. One reason why cocoa prices soared to over $10,000 a ton a few months ago. But once cocoa prices get above $8,000 or so a ton, demand tends to get hurt. Below $7,000 a ton, demand and grinding data picks up. So another bullish factor basically is concerned about these older trees and pods in West Africa and the fertilization issues. And also look at this crop stress developing there in red on the bottom of the page there. Not a factor right now as dry weather is good for the West African main crop. There's two different crops. The main crop that's harvested later on this year. But if this dryness continues into September, it could compromise the main crop somewhat. So above $8,000 a ton, demand tends to be hurt. See there in the upper right how grinding data has been hurt, but it's a very volatile market right now. Drier, cooler weather this summer is cutting down on disease issues. There's no El Nino. That's also bearish. There's still a big long position in the market. There's a stronger dollar, or at least there was earlier this past week. The parabolic curve, similar to the major collapse in Robusta coffee I caught back in March and April of over 30%, that long-term parabolic curve in cocoa is bearish. But you have stories like this coming out, making it difficult in the short term to trade. The supply crunch continues there on the left, very tight stocks. There's also various stories coming out about cocoa futures, being smuggled, cocoa being smuggled, Hershey's chocolates raising their candy prices. So one of the reasons that cocoa has fallen about 20% or so off the highs the last few months, you see there on the right, the Ivory Coast production is predicted to come back up again, at least to trend line this year. Look at the table on the left. Look at 2022, 2023, the end of the previous El Nino. All this, these problems in production fell to 4,250 million metric tons, a huge collapse in the global production. And we are expecting somewhat of an increase here this year, but it's not guaranteed yet that that's going to be any longer-term bearish factor. So drier weather there on the left in red during the month of July and early August helps prevent disease issues. One reason why cocoa exploded last year, all these disease problems. And then 2 years ago, we had a Harmattan wind, we had El Nino, we had all sorts of problems. The cool weather is good. Generally, it's been very warm with all sorts of climate change issues in West Africa the last few years that have increased disease issues. So from this standpoint, this is bearish. But hold on. Look at the rainfall the last 30 days in parts of Ivory Coast, a little bit in Ghana. Not a problem right now, but if it lasts into the second rainy season, there's two different rainy seasons around April through June, and again, September, October in West Africa. If the second rainy season is dry, and some of the models are suggesting that right now, then that would actually cause a potential bull market in cocoa. The teleconnections I use to help traders in corn, soybeans, natural gas, coffee, you name it, sugar, cocoa, all over the world. Here is a slightly negative TSA there in the Gulf of Guinea. If it cools off there over the next few weeks, that tends to limit precipitation, regardless if there's an El Nino or not. Okay, that's going to be the key as to what happens south of West Africa here over the next month or two. With a negative TSA, if that cooling continues, we call it a negative South or tropical South Atlantic index. Look at the dry weather that could occur in September, October. They're in red based upon my Client Predict program. That would be an issue in the next month or two. There's also something we call the Mattingly-Julian Oscillation Index, the MJO, that rotates around the globe every 1 to 2 months. It's a disturbance that can affect tropical weather, can affect the natural gas market in the winter. It's one of the factors we look at, these disturbances that move along the equator from west to east across the Pacific. If that MGO goes into phase 2, okay, you see there on the upper right, as it moves into close to India in a few weeks, that would increase the rainfall in West Africa. If it doesn't, if it stays in phase 6, look at that. That's a dry signal. So that and the TSA I just talked about, the cooling south of West Africa and the Gulf of Guinea, could set the stage for drier weather and prevent this market from falling very far over the next couple months. What about longer term, 6 months to a year from now? Most models have an El Nino neutral or weak La Nina phenomenon. Typically, that is bearish cocoa longer term. The bottom line is a lot of volatility, difficult to trade. I wish there were options. There's not. My Client Predict program, that doesn't look just at models, folks, but looks at sea ice, the El Nino La Nina signals, what's going on in the Pacific, the Indian dipole, all help me forecast weather months in advance. One of the reasons I caught this collapse in corn and soybeans over the last 3 months, way ahead of the pack. So the 4 most important weather phenomenons for West African cocoa production is April through June rainfall has been very sufficient. It's helped the main crop for sure. But it's also important that we have a dry July and August to prevent disease issues during the dry season. That's happening. But it's getting too dry right now. If that lasts into September and October, that could be a problem. You want to see normal to above normal rainfall return in September, October. A lot to talk about. And we don't want to see a strong, dusty Harmattan wind, that Sahara Desert wind that often happens with El Nino. If these 4 factors remain over the next 6 to 12 months, then it's possible 6 to 10 months down the road, we could see cocoa prices down around $5,000 a ton. But it may take 2 or 3 consecutive years to really get us into a longer-term bear market. 2 or 3 increases in production. 1 year is not going to be enough to create a collapse, I believe, in this market of more than 5 or 10% from here. So I also look at teleconnection or technical analysis for my clients. Look how it was bearish cocoa there about 5 weeks ago, around $8,500 a ton. But the market has become oversold, demand's picking up, and there's also a season to go long cocoa from tight supplies coming in West Africa into the beginning of September. So you have all these mixed factors right now affecting cocoa. I have people short the market and got them out here recently, hopefully with profits in my newsletter here over the last few weeks. The conclusion: subscribe to WeatherWealth. Get a 2-week free trial period. You can cancel anytime. One trade alone can pay for the service for several years, though past performance is not indicative of future results. Cocoa has lots of fundamental factors to watch. Look at corn and soybeans, all corn belt weather during July and August. So it's a very difficult time to follow cocoa, but we're doing it for most of our clients. How about coffee? This was back in May when coffee is trading around $3.40 or $3.50. It's now below $3. Robusta coffee's collapsed as well. I predicted no freeze in Brazil this winter, their winter, our summer. There's been rumors of frost in Brazil, but it's really kind of overzealous. It's kind of BS. There hasn't been a freeze in Brazil to have hurt the coffee market. Retail demand has been hurt. All sorts of these factors I look at that's helped the pressure coffee here over the last few months. Look at the rainfall in Vietnam, a big rebound in production of 8 or 10% above trend line this year, has been one reason. Look at that, a year or two ago, the red, the stress up there on the right, and now the blue, meaning really, really good conditions. A big contrast in rainfall in the Vietnam crop. Robusta traded in London has broken over 30%, and we caught this move over the last few months. Look at that parabolic trend line being broken. So the factors affecting coffee right now are Trump tariffs, right? There's also a season will be long this time of the year or in another week or so. But the weather is bearish. Talk about all this frost in Brazil and a record long position has created profit taking once again. We like to use options to trade these kind of markets. We'll educate you. There are no ETFs, I believe, anymore in cocoa and coffee. Those were taken away about 2 or 3 summers ago. Get a 2-week free trial period of WeatherWealth. Learn how I've been helping traders and farmers all over the world, and I advise some of the largest hedge funds too. Boy, for a fraction of the cost of what I get paid by hedge funds, you can get my information, and you can always cancel at any time. Have a great weekend and enjoy.